NotCoin is very interesting. The meme coin on the Ton blockchain continues to rise in price, even though the general meme coin market isn't doing too well. What's behind all of this? This is not the first video on NotCoin. I've made 3 already. Let's have a look at some data again that most people are not considering. So here we are. We are currently at 1.4 cents, up by 7% today, almost 190% this month. And yes, we did have our initial dump in NotCoin. But the big question is, does it make sense to buy rather low now? Is the momentum turning around? It's all about buying low, selling high. Let's have a look at what potentially is behind all of this. Now, NotCoin is on the Ton blockchain, and Ton is also doing pretty well. It's up 5% today, 20% this month, and over the longer time frame, over the last year, it more than 5x'd. And so there is plenty of attention on NotCoin. It's one of the best performing videos, 33,000 views 3 weeks ago. This is where I discussed the fundamentals of NotCoin. If you can call it fundamentals, right? In the end, it's still a meme coin. But the reason why this meme coin is doing so well is this here. That's the total value locked on the Ton blockchain, which is currently at 667 million. A lot of the recent growth happened because of D-Dust, a growth in total value locked of 472% in the last month. And that's because there is a lot of return to be made in the liquidity pools. So if you deposit your Not and Ton, so a 50-50 share on ddust.io, get an APR of 48%. That's not too bad. You can also simply deposit your Ton, but that's relative to USDT, so you have a bit more of an impermanent loss risk here. That returns 83% APY. Those APYs get generated through the trading fees, right? As there is trading happening on decentralized exchanges, on DDoS, for example, there is fees that get generated and parts of those fees go to the liquidity pool providers. So the APY is directly linked to the trading volume. The more attention there is, the more trading volume there is, the more transaction fees are generated. And so this is a self-reinforcing cycle. As there's more and more trading happening, more and more transaction fees are generated. Thus, more and more people put their money into the liquidity pools, increasing the total value locked, increasing the demand for Ton coin itself as well. And with it, meme coins on the Ton blockchain can do quite nice as well. But again, the volatility and the risk is much higher for Not compared to Ton. Now let's have a look at Ton coin. Not at NotCoin, but at Ton coin. There's 2 versions where you can actually look at the on-chain analytics. There's one version on the Ethereum chain with 24,000 holders. There's another version on the Binance Smart Chain with 51,000 holders. Now here's the Ethereum based token. This time we look at the number of holders based on different holding thresholds. So 200 tokens minimum on the left, 2,000 tokens minimum holding on the middle, and 20,000 tokens minimum holding on the right. So those are very long-term charts. 2,000 tokens is equal to roughly $1,500. So that's what I'd consider retail. In the middle is medium-sized retail, so $15,000. In the right is the whales, $150,000. And when we zoom in a little bit, when we just look at the last month, we see that a lot of the growth happens because of the smaller wallets. So Ton went up by 20% in the last month. The number of retail holders grew by a bit more than 10%, maybe 12, 13%. Medium-sized retail grew a bit less. The number of whales is harder to tell simply because the sample size is so low. But look at this, right? The number of holders is a very, very steady graph compared to the price chart. So there's every now and then a whale that does take profit here. Here are the same charts on the Binance Smart Chain. Here the growth isn't that constant. So yes, we do see growth as well here for smaller retail, but there is more profit taking. Most of demand now happens on the Ethereum chain. Now, why does the chart of NotCoin look much more like a pump and dump compared to the chart of Ton coin, which tends to be going up a bit more steadily? I believe that's because of manipulation and leverage. Let's have a look at the perpetual futures market. So that's the market where people can bet on a price without actually buying on spot. You can bet on the price with leverage, and then market makers might hedge against that leverage. So have a look at this. So that's a spot market. Most of the NotCoin transactions happen on Binance, on a centralized exchange. Now here's the same for the perpetual futures market. Just check this out. Blofin and Binance, and Blofin is just a rebranded Binance, both of those together have more than $1 billion of trading volume in the last 24 hours. Almost the entire market cap of NotCoin has changed hands in value on the perpetual futures market. Again, in just the last 24 hours. Compare this with TonCoin. For TonCoin, we only had 200 million traded on perpetual futures in the last 24 hours. 200 million with a market cap of 18 billion. So there's way more short-term speculation happening for NotCoin, and that's what's creating all of that volatility. This market is very dangerous right now. It's 100% player versus player. There's no more new money flowing into crypto. We can see this, for example, at the stablecoin market cap chart. So that's this chart over here. It adds up several stablecoins, and when we are in a bull market, we tend to see fiat flowing into crypto. When the bull market starts to die, then we simply just go sideways, and at some point things turn around and then the market is shrinking. This here, by the way, was the Terra Luna collapse. This is what this turned all around. Currently, again, we are unfortunately just going sideways, which is dangerous. In a market like this, I'm not necessarily a fan of meme coin trading. Instead, I prefer to bet on falling prices because most altcoins tend to underperform Bitcoin, especially in a bear market. And we are not yet in a clear bear market, but we are definitely not in an expanding market either. And so I simply just short graphs like this. I bet on this graph to continue falling. It has been falling for a long time, and I've got that position open for a long time. Since beginning of the year, this went down by 50% already, and I continue holding this, but I'm not sharing what that asset is here on the public YouTube. If you're interested in shorting the asset that I just showed, feel free to check it out, the premium membership. This is where I've got several tutorials on how to bet on falling prices, on how to make money with falling prices, what potential assets to short, where to find good assets to short. And yes, I believe in stacking the odds in our favor. In a market that's not expanding, you want to bet on falling prices. In a bull market, you want to find altcoins to buy. But currently, when no money is flowing into crypto and it's 100% player versus player, then why risk buying bottoms like this, right? The bottom can continue bottoming, right? Buying low doesn't mean buying the lowest, and the price already is bleeding for quite a while for NotCoin. Yes, we could short NotCoin as well, but why not be safe and short something that has a very constant history of underperforming? I will continue to make updates on NotCoin. If you don't want to miss those, feel free to subscribe. Feel free to also give this a like. It helps the channel grow. Feel free to also join our Telegram. Besides the paid premium membership, there's also a free Telegram channel. The link is as well down below. Looking very much forward to chatting with you. Cheers.